Carter Worth is standing by to talk us through the rails and what, Dom, today?
The transports and the relative performance there. So Carter Braxton Worth is going to take us through what exactly he's seeing and whether or not this dip buying mentality that we've gotten used to, and by the way, has been fruitful for a lot of people. It's been a winning strategy, is the way that you should tackle this now. So Carter Braxton Worth of Worth Charting, thank you very much for being here with us. Take us through what the thesis is. In your mind, is this a constructive setup for us to feel good about going back into risk assets and continuing to build positions?
Right. So, and hi team, happy end of year and so forth. So what I wanted to focus on is it's a macro theme, and it's something that's highly cyclical, not the Dow Jones Transportation Index, but what is known as the S&P 1500 Super Composite, and it's dominated by road and rail stocks. Exclusively Union Pacific, Norfolk Southern, CSX. Of course, you got the truckers like J.B. Hunt, Ryder, Landstar, Old Dominion. It goes on and on. Not airlines. That's the key. And we are breaking trend here. That's an important setback. And it's not just the absolute. It's the relative performance, because that's what alpha is all about. And so with that, let's look at three relative charts. We might have them here. And what this is you have a ratio, right? It's one thing divided by another, which depicts a relative performance line. And so this is the Super Composite Road and Rail Index, and its relative performance to the S&P. One could say, well, of course it's underperforming the S&P. That's got things like NVIDIA and Avago. But a peer-to-peer comparison, we'll have a second chart, is looking at the Road and Rail Index to all industrials. So now this part of the industrial sector's relative performance to great names like General Electric and Boeing or Federal Express or Otis Elevator or Ingersoll Rand. And then even more specifically, a final chart, if we look at the Road and Rail Index relative performance to the S&P 500 machinery, so two very cyclical, very economically sensitive. Here again, truckers and trains, so for lack of a better designation, road and rail, continue to slip, absolute and relative to important areas of the market. I think that's a problem.
All right, so Carter, if that is a problem, what does that say to you to do in terms of positioning or trading? How exactly would you express a view given that underperformance of roads and rails, which could be a leading indicator for the rest of not just industrials, but perhaps the market by large as well?
Well, that's right. And so I would just treat it as an idiosyncratic circumstance, and these are areas specifically to be underweight. And so obviously the big three rails are the largest weightings in the index. Truckers are by and large smaller operators. But it says something. Now one could say, yes, but certain rails haul grain, other rails haul cars. You have to get into the weeds. But the theme here is what's important. The poor absolute and relative performance. I would be underweight or short most of these constituents.
And by the way, before we let you go, seasonally, you tend to look at things as well. Kelly had mentioned the Santa Claus rally period. We talk about the seasonality of this time of year. What exactly do you think the setup is going into the first quarter of next year? Is it still one where we feel constructive?
Yeah, so interesting. Januaries have a way of being either further momentum, if you've had a strong year, as all will know, and you carry through, or huge reversals. And we've seen that in several years in the past decade. Rarely is a January a flat kind of thing. And my hunch is you'll see some backing away. And so buy, sell, or hold, I would be selling into the end of the year.
All right. Maybe not as bullish as other people are. Carter Braxton Worth, thank you very much. Happy holidays, sir.
You as well. Bye, team.